Hello, everyone, and welcome to the first episode of the Launchpad Roundtable. In today's episode, we take a deep dive into tokenomics and explore the emerging trend of node sales. Joining us are three experts in tokenomics who will share their insights and experiences. First of all, we have Sasha, the co founder of Arcanum Ventures. Arcanum Ventures is a venture capital investment fund, digital asset authority, and blockchain advisory firm. Second, we have Rodrigo. Rodrigo is a tokenomics advisor and the creator of the YouTube channel Token Design. Rodrigo entered the blockchain space accidentally during the pandemic when he got stuck on an island together with Sasha, where they collaborated on several token launches and have raised millions in new capital. Since then, Rodrigo has been dedicated to bringing sense, integrity, and good practices to token economics. Last but not least, we got Alex. Alex is the co founder of Simplicity Group, a consultancy specializing in token engineering, with a research and investment arm. They have designed over 30 economies and recently expanded into advisory services, helping projects with product development, launch strategies, and fundraising. Welcome to the stage and thanks for joining. How have
Hello.
you been? How are you doing?
Yeah, I'm very good. It's exciting. Obviously, summertime is always good to spend a bit time swimming, but let's not forget about the hot action in the market. I think currently a lot of things are ongoing and everyone's waiting for the next narrative to actually materialize and play around in the next cycle. So I'm excited to have our guests today to get some insights into their expertise around the latest trends around fundraising, how to deliver tokenomics, which actually match the timing. And obviously, we have node sales, which is a hot topic at the moment. Good things, bad things. Let's gonna see what we can discover today. I think we're gonna have a lot of great opinions towards it. So I can't wait.
Yeah, exactly. Since like we all waiting for what's the next hot narrative, and there are some popping up like meme coins. But I think the focus now starts shifting a bit, or at least in pre-sales, start shifting into node sales instead of IDOs and token launches. So that's what we're here for. We're gonna discuss node sales, the state of the market in node sales, and yeah, maybe also how that ties in into tokenomics, because after all, it's all one big thing, right? The node sales have to fit into the tokenomics and the other way around as well. They have to go hand in hand. Maybe first I go to Sasha. What's your thoughts on the state of the market, and what do you think about the current state of tokenomics, but also node sales?
Sure. Yeah. Thanks for having me first and foremost. I think the state of the market's pretty interesting. I'm not sure when this will air, but I think for the past month or so, everyone's been acting like Bitcoin's at 30K. When in actuality, the price is doing pretty good, but investors are, they're playing it cautious. They're not deploying as much capital. I don't know if it's a good or bad thing, but they're definitely taking some lessons, I think, from the last cycle, or at least the bottom of the cycle that we've seen the past couple of years. But yeah, there's a lot of investors that are waiting around for a narrative. I personally at Arcanum Ventures, like we don't really invest based on narrative. We invest based more on fundamentals. I think this is a very important thing to consider when you're investing into products or even teams that are building products. But there's a lot of narrative and hype around Telegram right now, which is really interesting. I'm not sure how to feel about that. And to be honest, I haven't designed any token economies for any Telegram products yet. I'm not sure if you guys have either, but this seems to be like a growing meta. Outside of that, I think AI is still growing strong. DeepIn is still strong. There's a few other narratives that are going strong, but I think people are focusing way more on like the actual project's fundamentals and the impact that products can have now, which is good.
Did any of you dive into Telegram tokenomics yet, Rodrigo or Alex?
Yeah, no, we had a tapping game that was doing it. I mean, honestly, the tokenomics, generally speaking, are pretty much the same across the board. Like the fundamentals of building a token economy are based on economics, not what chain you're on. So the fact it was a tapping game made it fun. But yeah, I'd say it's kind of similar, to be honest, to everything.
It it is a hot new narrative, these tap to earn, right? Where is that coming from? I don't know. But I also don't think these tap games are doing node sales. They're mainly built for tap to earn. So I will not go too much deeper into the to earn. Let's stay on the node sale focus or the tokenomics focus. But what's very important in tokenomics, I think, is valuations, right? Because you it's all about the value you pay for a coin or token to see potential upside for investors. Maybe there's my first question. How do you decide what's the valuation you put on tokenomics when you start designing tokenomics for a project? Rodrigo.
This is, in my experience, the truth is that it's very much driven by the fundraising objectives and the current market conditions. If you are selling your house and the economy is up, if you can sell your house for more money, you will. And that's the frame that decides the way that valuations go. And it's the same in traditional finance. People decide to IPO at times when they think that the markets are going to be more receptive to a high valuation. While we might idealize some sort of theoretical approach where we look at future discounted cash flows, the fact is all of these projects are so early stage that that's not really a viable method. So you just go by what the market's offering at the moment. And the fact is, it's an incredibly speculative market. So the valuations are there. You then triangulate. You look at, okay, who are our team? What kind of profile do they have? Where are we with our product? Where are we with our user base? And you use those sort of things to triangulate and say, okay, other projects that have had a similar sort of profile or are reaching valuations that are up here. So we should be able to credibly pitch ourselves to the market at that level. Or perhaps we've had an exceptional marketing campaign of some kind, or we've gone viral in some way. All those things, but it's art, not science, is the short answer there.
Maybe I can follow up just quickly here because you mentioned that all of these projects are early stage, right? I think, especially if you look into the topic of node sales deep in as a narrative, there are certain players which come in with actual turnover and maybe even a Series A company who suddenly wants to enable this layer of the protocol and embrace Web3. Can you maybe point out, and maybe also the other guys here in the call, what would be your number? Let's go out. Okay, we have an MVP product. We don't have really revenue. We want to now launch a token, raise funds to actually go to market. What is a fair FTV in your gut feeling in compared to maybe a Series A company with $1 million ARR coming in and saying, hey, we have our business. We know the business works. Our clients demand from us, go to Web3. We want to use these new technologies for our benefit. Obviously, the FTV will be different, right? And also more accepted. Can you maybe just give your thoughts around these kind of two divisions?
Sorry,
Rodrigo,
just to clarify your question, are you asking about the difference between a Series A valuation and a pre-revenue token valuation? Is that your
No,
question?
actually, the difference is like we have two companies coming in. One has an MVP product. They launch a token to go to market. And then there's a Series A grade company with actual revenue, with a proven product, with product market fit coming in and establish the token. So they both launched their token. It's a similar stage in Web3, but on paper, like the business is established on one side, on the other. Does this actually impact the valuation of the FPV, or is this nonetheless early stage talk? And maybe if you're
Sorry, it obviously will.
I think you have.
You have, if you
I love hearing Rodrigo speak about this stuff because he brings this traditional financial perspective into it, which, much to my disappointment, doesn't apply in Web3 all the time, which really sucks. I think I've got my own perspective to your question. Really, it depends on what's being sold, and so there's a couple of what you might refer to as Web2 companies that we've worked with. They have healthy revenue generation. They have a lot of this information that they could show to investors, but they might be launching a digital asset that's untethered from the core business model of the company. And so much of what Rodrigo was mentioning is, as much as you want this to be like some black and white process that makes sense to everyone, it's very much not, because a lot of the sentiment and a lot of the valuations are driven by what investors are willing to accept in the market. And it's a shame because you might have a really strong team with an amazing product, and they might compare to, let's say, something that launched a year ago that was able to fundraise against a very high valuation. But because the market conditions are poor, maybe they have to cut that in half. And so it is a strange game that you have to play. We've built token economies and business models and even financial forecasts for companies that have showed extremely healthy revenue projections, even at the most conservative of circumstances. But this is only one little piece of the puzzle that investors will look at if they're trying to figure out, is this investable? They're going to look at a lot of other things like the marketing reach. They're going to look at things like the vesting schedule. And we know now that the reason they're looking at these things is because they're hoping to get that early liquidity and they're hoping to dump it on the market, and they're hoping that there's going to be someone else to pick it up. And so this is the math that they're running. And unfortunately, it's not rooted in what we might see in traditional finance. There are some investors that still do see things this way. And these are the right types of investors to bring on board. But just to better answer your question, if you are launching a token for a DeepIn project, for example, and that token is simply just going to accrue value from the economic activity, the transactions, the user activity on your network, then what you're really selling is just a slice of that economic activity. You're not selling a piece of the company. You're not selling a piece of income that's coming into the company. And so the valuation might be completely different from what the valuation of that business will be.
And very good answer. And sorry to cut you off, Rodrigo. I think there is a small delay, so we let you reach the words when we speak to you. Maybe you want to also do a statement about it.
No, I agree with everything that's Sasha. Yeah, I mean, equity and tokens are different ownership rights, different claims, so they should be valued differently. And as Sasha was saying, all of these other factors come into play. Investors are primarily thinking about a financial exit, and tokens allow you to go to sell into the market early on in the life of a project, whereas equity, with traditional equity, you have to rely on a private sale to other investors, or you have to wait until they IPO. And the only companies that IPO are ones that are big enough to really have something to go to market with, and that there are all these regulations that require them to shore up their game internally. It's just a completely different situation. It's very sad, but it's just all too easy for investors to dump and exit. And because the fact that the fundraising token is also the token that's meant to do some work in the economy, the fact that you design the fundraising this way inevitably just ends up hurting the project, its treasury, and its communities. It kind of leads into the topic that you brought up for today, which is out of node sales, and how does this structure maybe mitigate some of these concerns and offer a better solution for fundraising.
I just want to touch back on the valuation part one more time before we go deeper into the node sales. Sasha and Rodrigo both mentioned when deciding a valuation that sometimes you go and look at another project that is doing kind of the same. And when I talk to some founders, I realize they do this and they say, but I'm going to give an extreme example. For example, within the DeepIn space, let's say these founders say, we are building something like Render. Render has a 6 billion, I'm making up numbers, 6 billion market cap. So we are only raising at a 2 billion valuation because you're buying at 1/3 of the price of you actually buy Render, and we are building the same thing or the same, like, how do you make sense of that?
You don't. It's just
don't.
wrong. It's just bad. Like, I think what founders seem to forget is that if you're building exactly the same thing as Render, then people will just use Render. Like, no one's going to use you if you're literally the exact same product. It's just, you're not going to get traction. You're not going to get product market fit because Render has a brand and they're already doing what.
Yeah,
So
but
you're not.
so there, my question is, like, all these founders, they look at it that way. We are building something like IMX, so we are going for a valuation like IMX, FDV nowadays. While they haven't proven anything, they don't have any working product. They maybe have a community through a quick social engagement campaign where they got 200,000 followers on Twitter, and now they suddenly think, oh, we are worth the same as IMX, Render, all these blue chips, let's say. And I think that's a bit where the system is broken, and where maybe we as thinking about tokenomics and fundraisers can maybe make a change. What do you think, Sasha?
This is an interesting one because it's in a lot of ways, it's not so different from what happens in traditional tech startup. If you think about how a lot of companies will try and raise funds with an equity sale, let's say a Y Combinator SAFE, they might seek funding from what they would refer to as a lead investor. And a lot of times it's this strange dance, this back and forth between a lead investor and the company to determine what the appropriate valuation is. So a lot of times you have this lead investor come in and say, I'll invest under these terms, and then set that valuation that's suitable for them. And that sets the stage for all the other investors to come in under those terms. So you see that happening in Web3 as well. You have a company that goes to market, says, we're similar to Render and they did 6 bill, so we're going to do 2 bill. And then it's up for those founders at this speculative early stage to try and bring on funding to justify that narrative. What competitive advantages do they have to Render, or what advantages does their product have, or what kind of networking connections does their team have that's going to help them go on maybe that same exact trajectory, but faster and capture more of a market share. But this is the narrative, or this is the justification they have to offer to investors to show them that we believe in this valuation. Otherwise, investors are going to strike it down and say, there's no way I'm going to buy tokens from you at this valuation. And you see it happen all the time. Companies will take a token sale model or a fundraising strategy for tokens to investors, and they'll say, you need to cut this down, and they'll do it until they get maybe like a seed stage ticket on. So yeah, it's a very common thing in traditional tech as well.
And here we're still talking about private, right? In traditional tech, when there's a lead investor, it's like a private race, where if then we go to an IPO stage, which Rodrigo mentioned, it's not really the lead investor who decides the valuation. Then it's more like whoever offers the IPO, right? Who decides that valuation? And maybe we as an industry can learn from that there's an external person instead of the investors and the teams who decide the valuations.
That
Rodrigo.
kind of happened with super oracles. And I think it's still happening. But anyways, I'm going to shut up now. Rodrigo, I want to hear his take on this.
No, you tell us about what super oracles are doing, because I hadn't heard.
I mean, there's a lot of companies, I think, that they started to gain a lot of traction on the fundraising side. They saw that there's more and more demand, and they decided to up their valuations, up their token price, up the amount that they're raising, add additional fundraising rounds at higher valuations. And so it's kind of like this market that collectively decides what that IPO or IDO price is going to be. We've seen this with a lot of projects in the past couple of years, but this is how you end up with, like I think it was EtherFi going to market with a $2 billion public valuation. And that was for a governance token. But it happens. It's just, I don't know if that's the right way to do it, because then it's even more speculative.
But do you think it's because of the project though? I'm almost certain that when it comes to these kind of tier one projects, it's because they have the tier one investors who then say, all right, okay, cool. What we want to do is sell these tokens OTC to the tier two investors by a higher valuation. You then sell it at a higher valuation to the tier threes, to the tier fours, to the community VCs, to the KOLs. And then the tier one investors already out there. They were out 10 years ago.
Is that the first hot take? Yeah, I think that's what it is, right? It's that cap table momentum. And so they're just turning this over into to lower tier VCs. They're saying, oh my God, you've got Binance on, or you've got who else on? I'll totally invest in round 13. Let's go, baby.
Yeah, so maybe this also correlates now a bit to the node sale rounds, right? If you look at after with 53 rounds with this progressive pricing, it's definitely the FOMO which kicks in, and more trust is triggered towards the project, which lets you accept something which is maybe not even a good deal anymore, which you only find out once you hit the market. But like maybe just to align fully on the topic of node sales, maybe one of you as experts for tokenomics, can you maybe shortly frame what is actually a node sale? Where does it stop? Where does it start? Because I think a lot of projects try different methodologies and maybe even merge certain like rounds together. So can you maybe out of your perspective just frame what is a node sale for you?
I'm assuming we're all familiar with what nodes are on this
Maybe
podcast.
Good to
So
mention for the audience.
yeah, so we're actually about to release an article. We're going to release an article series on node sales because we've been working on a few. But in the context of what's been happening, like node sales, we're not talking about like an Ethereum node, a layer one, or a roll up, or a scaling network. We're talking about what you might refer to as an application chain. And so you've got these kind of like purpose driven blockchains that are being developed on, let's say, layer one networks or layer two roll up solutions. And they serve a single purpose in the sense of maybe like this is to power a global DePIN, or this is to power a gaming studio's ecosystem where they're going to launch all their titles, and they want better interoperability of assets between all their different titles, right? And in order to do that, they have to have some sort of node network, and then nodes they'll help validate transactions. They'll help add security to the network. They provide a lot of other benefits. So in a lot of ways, these nodes are essential, and they actually add to the network security. And so what's been happening on the node sale front is that there's companies that are selling nodes to individuals, much like how you can buy an Ethereum node. but they're selling these nodes at what we all on this podcast know to be like very high costs comparatively of what we might expect. And so the real question is, what are these nodes really worth? And what do you get for running these nodes? And I think that's going to be really interesting as we dive deeper into this conversation. But that's kind of like the premise of where these node sales are coming from. It's something essential that must exist. And so they're selling it as a result.
Can we maybe see it as a private sale where that the private sales back in the days were being sold to VCs, let's say, with longer unlocks? Let's say the token unlocks over the next 3 years. But now they put these private sales into a new jacket. They call it nodes and they sell it to retail investors at absurd valuations. Maybe a hot take?
Yeah, I mean, 100% that's what's happening. So if you look at how these nodes are actually functioning, they all function slightly differently depending on the parent network they're built on. And they all have different types of responsibilities. But what's happening is that these founding teams will programmatically include additional token rewards or additional distributions to node operators. So the way that the nodes work is if you have a node and it's running, let's say on a random day, your node is running, and then it performs like an attestation, then you will get a token reward from the network, much like you would for Ethereum or Bitcoin or whatever. And so you're getting a piece of the pie when it comes to network activity. But the way that these nodes are being sold is that they'll say 50% of my token supply is also being granted to node operators, and they're being distributed over this many months. And so you can go in and do some simple math and say, that's 5 billion tokens and there's, 5,000 total nodes, that means minimum I should get 1 million tokens. And that's my kind of node token pre-sale, if you will. The funny thing is that's only one part of the rewards structure because you're also getting a portion of network fees. So the way these things have been offered is that you buy a node and then you get, let's say, a portion of tokens that are prescribed to that node over a long vesting period. So they are using it as a token pre-sale mechanism. But the added speculation is, what happens if we get a lot of users and then we get more network rewards? There's so many pieces of this speculation puzzle in the node sale landscape right now, and that's just one of them.
Can I be a bit shitty here? Imagine, before you couldn't do a public sale without some portion of the tokens being immediately liquid. And this is a problem for everybody in some sense. So and before you wouldn't be able to say to a retail investor, hey, buy these tokens, they're going to vest really slowly for a long time. But now you call it a node. And on top of that, impose responsibilities of you to actually operate and maintain this thing and keep up some sort of level of service. And it becomes more valuable. You accept you accept the package. It's kind of funny. Is that too rude a way of describing it? Is that too crude?
No, it makes
No,
total
it's good.
sense. It makes total sense because also then like this, you're a community member for 3 years, right? Until till you're break even on that investment, hopefully. That's a way for these
But
projects.
this is the thing. Yeah. Fundamentally, that's great. I'm all for any fundraising devices that restrict liquidity and supply long enough to give the project some time to grow. Will they actually grow for those tokens to have a valuation 3 years out? Well, that's another question. But in the first, they didn't have to use a node sale to get to the same result. They could have just used longer vesting shifts, but that wasn't the convention. That wasn't the fashion. So here we are. But I'll tell you what is nice about it is that, very fundamental problem in economics is the thing they call the principal agent problem, which is something we've all experienced in work when we get hired. Your boss is employing you to do work, and they have to trust that you do the work. And this is like at the center of the work from home debate that's going on at the moment. If you're working at home, how do I know that you're doing stuff? And one of the problems we've had with all of these reward programs is that we just sort of we're just spraying out tokens and we don't know what anybody's doing. They're all mercenaries. They're all on to the next shitcoin, the next opportunity they get. So if this is really a node, if this is really a service that deeply needs a node infrastructure and all that stuff, well, great. This is a device that checks that you are making a contribution to the network. So there are cases in which this structure, this approach makes sense and is well motivated, economically motivated, but it's also very easy to just dress it up as use it to dress up a bad deal. And that's, the same thing with everything we do here in this space. Like it can work, but it's also really easy to con people with the same formula when it's a fraud or insincere or crap.
Third hot take. I did want to say, I'm really glad Rodrigo's here because I think he's going to get a hernia from all the crap around node sales that we're about to talk about.
No. I want to be like, I was being positive there, right? You can see how these things work. You can see how they can be positive, but there are a lot of ifs behind the whole thing.
Well, Rodrigo, like what you're describing is already happened. There's a number of node sales that basically they're offering nodes, and the nodes actually aren't nodes. They don't have any function. You're not running or operating anything. They're selling NFTs. And in that sense, it's no different than a metaverse land sale in 2021. They're just dressing it up as a node sale. And these projects that are launching this network of nodes, they're not really launching a network. And the ones that might be that are just selling these NFTs, they hold all the nodes. So what's the real decentralization there? So it gets crazy, man.
And I know, I think I've definitely had a client come to me saying, I want to do a node sale. I'm like, cool. What do your nodes do? I just want to sell this. I mean, but this was 2 years ago before this node sale thing became a fad. I'm glad that people are still getting bright ideas out there.
That client was very early, to be honest. It could
that's an alpha.
have worked.
Definitely,
Like-
and it's so interesting to see that people always come up with new things, how to package their fundraising better. So I think what you shed light on is actually very true for a lot of cases. For some, it's not, and maybe because of the sum, for all the other, it works for a while, and then suddenly the retail thinks, hey, whoa, there is something wrong. Let me not go into these projects, and then a lot of the good projects actually start to suffer. What is actually your take, Alex, on the whole situation around node sales? Would you personally, as a founder right now, after all what happened, still do a node sale, or would you try to more classic launch and then eventually go into distributing your nodes in a different way if you actually need a network to support?
I think like everything, it very much depends on the project and what you're trying to achieve. Like for some projects, doing an IDO is the best route. For other projects, just launching on a decentralized exchange, 100% liquidity is the best route. For other projects, going on Fjord or other Dutch auction mechanisms is the best route. For other ones, it's node sales. It just very much depends. But nodes inherently, right? If you sell them at a reasonable valuation, if they are actual nodes, right? Or even if they are a license for you to then run nodes in the future or delegate, whatever it is. You do them at a reasonable valuation. You're basically bootstrapping security. So it's like in the same manner that you can bootstrap liquidity, right? Where, you invest, but then your tokens don't go to you. They go into a liquidity pool and you can cash out liquidity, which is like another mechanism of raising. You're doing the same thing here. You're bootstrapping security in a way. You launch it and all of a sudden you have all of these nodes being run by the average person, for example, who invested $50, $100, and then they're getting network security and it's all reasonable valuations and so on and so forth. I mean, I think it's definitely a good method of fundraising. But again, like everything in crypto, I think the first person to do it was like, yeah, this is good. And then the next person to do it, all right, perfect. Let's do our $5 billion valuation. And then it just goes from there, really.
Like this is, you made a really good point. You're bootstrapping security. I think like what Rodrigo mentioned as well, like if it makes sense in the context of what you're building, and a node network needs to be there, then it can be a great fundraising opportunity. And if you think about what's happening, what you're doing is you're selling a license or you're selling a node and you are granting rewards, you're granting value to people that are directly contributing to your network from day one. And that's fantastic, right? Narrative wise, it makes perfect sense. But if you look at the numbers, I think just like Alex mentioned, like the first person to do it probably had the best of intentions. The second person probably had the best of intentions. The fifth, you're starting to see some crazy valuations. And should we just call some names out? I guess we'll call some names out. All right. So let's take Sophon as an example. I don't know if you guys are familiar with Sophon. Sophon is a node sale, Sophon. And when it came to market with this landing page, and it was very vague, and it said it was a blockchain, and there was no information anywhere. And they ran a node sale and they raised $62 million just a few months ago. $62 million on a node sale. And if you start to think about like, what is this company doing? They're building a blockchain. Okay, that makes sense. There are blockchains that exist that are, they're very, very good. They're very large. They have a great user base and they did it with way less funding. And so you're trying to figure out like, are they raising the right amount? But then you have to understand, what are they giving in return? And so if you read some of the information on Sophon's node sale, like it's very vague, but they talk about this is how many nodes we're going to sell total, or how many total supply we have. And this is how many tokens you can expect to get. And then they have their like tiered price list. And so like Alex mentioned, the valuations or the implied valuations are really everything. Because if you look at some sorry bastard buying at the very tail end of that node sale, in order for them to break even, the valuation of the Sophon node supply needs to maintain $6.5 billion. And so they're selling a node for tens of thousands of dollars that most likely at their public listing price for the token maybe gets like $200 worth of tokens. So it's largely been corrupted by these people. And that's only just one example of maybe a dozen that's come to market. So you have to think about, what is the right valuation for this company, and how am I going to sell these nodes with that implied valuation to make it fair for someone? Otherwise, I'm screwing these community members.
I think that's nothing here is financial advice, just to be clear, but I think that's some great advice for the community members or retail investors that are planning to look into node sales, looking at the valuation of the company, looking at what could be a potential valuation, and then check that list of 50 tiers and see what's the implied valuation. Because many times, for example, that the tier 1 node is at a 20 million valuation, while the 50th tier is at a 2 billion valuation. Yeah, the person who get in the tier 1, tier 2, tier 10 maybe, they might break even easily. But all these other nodes tiers, they might sit on their node forever and never get out of it.
So just to add to that, like the one big takeaway I did want to mention on that is, a node sale can be a fantastic way of funding your company if a node and a node network needs to be there, but the valuation needs to make sense. And if so, your two options are, I'm going to launch my token at a public valuation of $100 million. And that makes sense based on like everything that I'm building and all of the other competitors that have launched in the past 12 months that have a much higher valuation. That makes sense. But if I'm selling a node and the token release schedule for that node is twice as long or 3 times as long as like an IDO, then maybe I should give them something of greater value. Maybe I should sell that node at a lower valuation than what I would at an IDO. And that's how you grant real value to users that are buying nodes. That's how you reward your network contributors the most.
Yeah, that's a good point.
I mean,
Launching the nodes at lower prices or lower valuations than the public or even the private sales, because they're going to be locked up longer, and they also do something in the network. They do the work. Let's say the nodes do the work anyway.
I had a client who did a node sale, but it was like in the context of an ICO. What we were selling was the minimum amount of tokens required to operate the node, because there was a staking mechanism. And part of the analysis that I did, because they were institutional investors, I checked the return against the operating costs of them actually doing the thing. I looked at both sides, and looking at these valuations is a great first step, but don't, factor in all those obligations, whether it's a hardware costs, time that you also have to put in. And that's also needs to come into the picture if you're being thorough.
Do you mean here the hardware cost and time from the node buyer or from the project itself?
No, from the node buyer. If the buyer has needs to maintain certain level in a layer one. You typically have things like slashing costs. You have to that check that you maintain a certain amount of availability and so on. If you do not meet those required performance standards, you straight out lose money, right? This all depends. I confess, I haven't been looking too deeply at all these note sales, but check the obligations that you have to live up to as part of the deal here. And I'm sure for a lot of these, they part them down and make it seem like it's nothing. And maybe it is nothing in some cases. Just pay attention to the fine print there and factor that in as well before you make these decisions.
And on the point of the different tiers within the node sales, right? You all tokenomics designers, so I think you're the right people to ask this. Why so many tiers? Why do we need 50 tiers? Why can't we just do it like a private A, B, C, D? Like 5 tiers would be fine, right? But we get 50.
It's more fun, man.
That's it. That's all it is.
So you have there's a lot of different reasons why you might do that. You might want to offer a specific tier to, maybe say, a specific DAO or a specific community in your network. Might want to give them that entire tier. You might want to spread out a number of tiers to offer to a launchpad partner that might want to sell nodes where they can get their community more excited by gamifying nodes that come at different valuations. There's a lot of different reasons for that, but the tiering and the idea of exclusivity and the different prices across the tiers ties right back into what Rodrigo said. Like, you, in one tier, you might be sitting pretty. You might have a valuation where, like, you stand to make a good return on your investment at the theoretical public listing price, whereas the tier right after that might be in the red. And so you have to understand what these costs are. One thing that a lot of these proprietors of node sales are not talking about, which is something I think a lot of node investors have run into without expecting it, is these operating costs. Because not only do you have to have the equipment, you have to have maybe even some dedicated hardware, but you have to have the technical knowledge and understanding how to actually set up a node and run it. And let's be honest, people aping $60 million into a speculative node sale like Sofon, the majority of those people most likely don't have like dedicated NVIDIA chips to run nodes. And so they're buying into it at some speculative venture. And what's happening is that there's a lot of these different node operations agencies that are traditionally like what you might go to delegate an Ethereum node to, and say, I have an Ethereum node, I'm going to delegate it to you. I get the rewards, but they cost a monthly subscription fee. And so these node investors are running into unforeseen costs. Actually, some of these companies charge $5, $10, $20, $40 a month. And if you're talking about like, I'm going to invest in this node and theoretically I get $500 worth of tokens at listing price over 30 months or 40 months, if you're paying $40 a month, you're going to be deep in the red. And so I think a lot of these companies that are launching these node sales are not talking about this, and people are getting screwed left and right.
Yeah, I actually think a lot of the founders don't even know what requirements they're going to have. They just use this very early stage, leave it undefined because it's acceptable. And then they figure it out on the go. And suddenly, like, oh, wow, you need to have the hottest chip from NVIDIA, which costs $1,000. Like, we didn't know, whatever. We have the funds to continue. So I totally agree. There's a lot of hitch hatch going on, which is not super transparent. And obviously the hype is being abused sometimes as well. But nonetheless, for the DP narrative, I think it's a very fair structure to let people participate as well in this infrastructure place, because so far it has always been the institutions who actually rule the infrastructure. So there is also an opportunity and fairness, or at least the thought of fairness behind this whole structure.
I think just to quickly answer the question as well about why 50 tiers. I was thinking about it, since you asked. I think, to be honest, if you have infinite tiers, whereby every single time someone places a new order, the price, the valuation slightly incrementally goes up, right? Versus whether you just have one tier. I think both of those are boring Whereas you want to be somewhere in between where you want to have this gamification of me and Sasha buying in at $20 million valuation, whereas Rodrigo is just a little bit too late. He's now at 25. And I think that's how it started, then progress into people expanding into doing like 50, 100 tiers. Because honestly, I couldn't really think of another reason why you'd have that from like a technical perspective. I think it's literally just gamification on steroids.
Yeah, it makes total sense as well, and it makes a buyer feel special, right? It does give you this sense of I'm special. I get access to this tier, so I'll buy it. And you also create a sense of FOMO, right? Sasha, you're working together with Saltwater Games, which do quite an interesting way of their node sales, where, for example, as a launchpad, we get offered X amount of nodes per tier. And then we can let our community go in, and whoever is first gets this first come, first serve in terms of tiers, where we get X amount of tier one, X amount of tier two, X amount of tier three. So then it's like a free for all, first come, first serve. And it's an extra gamification again, where some might get a good deal, some maybe a less good deal, maybe still a good deal. But it adds to that the fun element because everybody loves a good first come first serve or chasing to a mint back in the NFT days.
Yeah, absolutely. And it's kind of similar to what you might see on like a Dutch auction or something, or you have this exclusivity built into like this first mover advantage. And in that sense, it's very similar to just buying a token at a different price. So that token has a similar, they're all the same tokens when they hit the market. They have the same value, but you're buying them in at a different price. And so the real thing here is just that implied FDV of the tier for the node that you hold and the ROI that's implied from that FDV. And so this is the fun thing about gamifying it. You can put numbers or labels to the different nodes and saying, I'm gold tier and you got silver, suck it. I got here earlier. So there's some fun that comes in, but it also makes sense from a community standpoint where you're trying to offer something to community members. And maybe Rick, I know you at Engine Starter, you guys do a great job at fostering community involvement and you guys have an ambassador program. And so all of a sudden you can start offering more attractive assets to people that contribute more in your community. So it gives you guys another avenue to really build a greater brand loyalty.
Yeah. Yeah, that makes total sense. And we are kind of round to the circle now. We're back at like FDVs, valuations, all within the tokenomics then. But thinking about it, we have node sales, we have IDOs. Do we need both, or is this more an or? What's the ideal situation? Does a project sell nodes but not do an IDO? Does a project do an IDO and not sell nodes? Or does a project do an IDO but also has nodes? What's the ideal situation in your opinion, or is there no ideal situation?
I think it depends on the
Alex
persona
answered
of
to
the
that earlier.
investor.
Alex, do you want to?
Yeah, Alex.
Alex touched on it earlier as well. I think he said that it's based on the project itself, but is there an ideal situation, a combination or and or?
I think if you have nodes inherently needed in your ecosystem, it could be of interest to give nodes to people who can run them, aka institutional players or investors or whatever, and do a node sale like that. But then to the normal community people, just do a normal IDO or ICO or IEO or whatever. So alternatively, you can do both. I think nodes generally reward tokens on a slower, longer time frame. So the fact that they also have high valuations is obviously a little bit broken. It's stupid. The fact that people are investing into them is retail at its finest. But I think doing both can be pretty good if there is a need to have nodes. Like IDOs in general are pretty good because you're allowing the community to buy the tokens. But honestly, from my side, I think it's just very case dependent.
I saw Rodrigo laughing. I'm wondering why.
I've laughed a lot, so I'm not sure what I was laughing at specifically, but I think Alex just got it really right there. If your network really does need nodes, chances are that there are going to be some pretty precise technical requirements on operating them. It is in your interest as a project to make sure you have competent people running your network. And do you want to put that risk? Do you want to add that to the risk of your project by doing an open public sale, which has zero diligence behind it? Probably not. Yeah, like I said, I haven't been digging into all of these projects, so I don't really know what's involved with running these nodes. But if these technical requirements are real, it will probably break in the direction Alex said, which is that you should be offering these to vetted institutional investors who have the capacity to operate these things as you require. And I mean, that was, we did use this structure for a client a couple of years back, and where we sold the stake required to operate a node to private investors and then ran an IDO at the same time. So, it's been done.
And when designing tokenomics, what percentage of the total supply is a good percentage to allocate to nodes, for example? Is there a best practice, or is this just a number?
I call it witchcraft.
I think I know Sasha definitely has 20 client examples there ready to unload, but just very quick. I think Rodrigo was saying this earlier, if I'm not mistaken, about calculating the operational, costs and then the revenues from that. That's typically what we propose. So we had this layer 2, which wanted to do a node sale because they're layer 1. And it was just a matter of, look, if it costs this amount of money to run a node and you have this many nodes that you're selling and you're expecting maybe 60% of them to be bought, then give that amount of tokens based on the valuation. And then lo and behold, everyone is net even. And then from there, it's just profit. Because profit you can't guarantee because maybe you just die and the network dies. I mean, obviously, by that point, you have bigger problems anyway, and your token valuation goes down regardless. But, witchcraft-ish kind of, it'll make sense. That's kind of, I think, the best approach. I like this witchcraft.
Yeah, but those are the things that absolutely should guide it. That's how I would approach it. But yeah, these highly uncertain intangible things about, are you actually gonna grow your user base? Is your token gonna take off? These are all the things that ultimately matter in deciding what the token supply should be, which you can't know at the very beginning. So if it sounds flippant or dismissive for me to call it witchcraft, it's just that these important factors are totally unknowable. But the approach you gave, Alex, is the best you can do in that position to draw up an offer in a methodical and a sensible way.
I have also a follow-up question here to just specify a bit more closely. Like the whole market, you obviously know as well, is talking about these high FTV, low circulating tokens, and no one likes it anymore. But isn't node sales kind of implying again the same problem? Am I mistaken on this, or is it leading to the same direction?
I think it depends on how many nodes or how many tokens are being allocated to how many node operators and when those tokens are going out. And so if going back to that question of whether you want to run an IDO or a public sale, or whether you want to allocate your token distribution to your node network, I think it does depend on the different types of personas that you're trying to attract. It can be difficult if you're launching something like a gaming network and then you have a node network and you're trying to convert node operators into gamers. That can be difficult. It's got to make sense, but it might be more logical to also run an IDO where you could put tokens at less favorable terms, maybe easily into the hands of people that are in this space on a day-to-day basis. They also play games and then convert them into gamers. And so you can have more tokens circulating on day one, maybe less value going to some of these individuals. So you're not following that high FDV, low float model, but these people that are contributing to your network, they're operating these nodes in a long term, they stand to earn more as time goes on.
Yeah, that makes a lot of sense. Excellent. Rick, what do you think about the time? Should we go into some hot takes of our guests, what they see and maybe want to share as a fun story for the community?
Yeah, I think we already had a few hot takes, but if there are more, then I'm all ears and I'm happy to discuss these. Sasha,
Yeah.
you got any? You want to throw
Yeah, I
some more
got a
names?
hot take. I got a hot take. Tap to earn games are the worst of humanity.
I think it shows so
Yeah,
much
sure.
where the community or the society goes, right? Like everything is just super short-minded, and attention span is literally going towards goldfish kind of level. I'm personally getting used to this short form. I need to really take time, sit down and listen to a podcast like this one to actually understand deeper knowledge, because you're so used, everything is quick. So I understand that these games and these plays work, but obviously there is much more to unfold in the whole like area of a tree. But yeah, what is it? Like, what does bring economic value? Like, no one knows still. And we're here a couple of cycles already.
Isn't tap to earn a bit like the meme coins, where everybody knows that long term there's not really value or it's not really sustainable, but everybody likes it because it's just such a short attention thing, and like it's a bit of a PvP. Like I make tokens, I sell tokens, someone else buys my tokens, and hopefully I'm not a bag holder.
It's like it's the lowest common denominator of what you could define as gaming. Like play to earn. When everyone thinks back to Axie Infinity, they were like, wow, that game was awful. Like it was not even a game really. What is tap to earn then? It's no different than TikTok. You're just sitting there and milking dopamine and it's making us dumber. I understand that there's some benefits of being able to use this economic structure to quickly grow a user base and demonstrate, like, look at all these active users we had. But that was very quickly corrupted as founders were trying to like throw these inflated numbers at VCs' faces, who then threw them $1 million checks. So I think it's like a complete misstep in this industry. And I mean, it's doing Telegram some good, but I don't like it one bit. I think it's doing the same thing that TikTok is doing. It's making us dumber. It's shortening our attention spans. And it's promising something of value, but most likely not giving anything of value.
Talking about a step, back in the days we had step to earn as well. Compared to tap to earn, step to earn was actually very nice, a very nice mechanic.
Yeah, at least you lose some fat or something.
Exactly.
I think Stepan is still active. I have the app downloaded 3 years ago. I only open it when it remarks, hey, you stop earning credits if you don't open the app. So I open it once in a while. I just think the revenue model is just broken in this kind of X to earn place because you don't have real economic value coming in. So if every stakeholder is earning, eventually someone needs to pay, right? That's probably what Rodrigo passed through your head. Who is paying all these people, right? Like we can make up from thin air a lot of value, of not money, but not value. And then it breaks at one point.
The value is that the data. Like when it comes to moving to earn or stepping to earn, it's just the data of how you're doing it. Like there was this eco-friendly, like eco-focused project that we were working with, and they were rewarding people for taking the more eco-friendly route to work, whether it's a bus, a bike, or walking or whatever. And at first I was skeptical. I was like, okay, but how are you rewarding people with this much, token value? And then they were like, look, we're selling the data to the government. We're selling the data to the public transport companies. We're selling the data to other, like they had so many institutions and players that they were selling this data to of how people are traveling, how long they're spending. And it was like, you know what? Okay, fair enough. So you're actually, there's a revenue model here. And I think for all of these something to earn
That's right.
games, it's just a matter of you're doing something. You're just like, it's that famous quote, which I can't remember exactly how it goes, but it's like, if you can't see the product, you're the product or whatever it is.
Yeah.
It's just, you're selling your data, but in a much more engaging way. And then you're getting paid a little bit for it. So I do think anything to earn is actually one of the most simplest and easiest to build and make work models. It's just that, as a lot of things in crypto, economics, what's that? What's business? You don't need that. You just need a token. Yeah,
But it's a good thing that economics exists within crypto, otherwise you wouldn't have a job, right?
yeah, exactly. I wouldn't be here. Like, be trading shit coins. Probably would make more.
We're a jolly bunch, aren't we?
This guy is so depressing, man.
It's a sad thought every morning. It's just like,
Is there something else that you're excited about? What's coming up or what's going on right now in the space?
So many people mentioned it today. It's the new narrative, right? It's coming.
what's the narrative?
Don't
The
say
new
tap to
narrative.
earn
I
again.
don't know, everybody's waiting for the new narrative. I don't know.
Uh-huh.
It's the Messiah or something. It's coming. I don't know.
It's
the new
coming.
narrative.
It is coming. No one knows what, but watch out. Don't mix it.
I don't know. I don't know if there'll be a new narrative. Like, how about it just, like gradually increases based on people coming in, ETH and Bitcoin, ETF inflows, and then it just gets healthier. Like, I wouldn't be surprised if that happens.
Boring.
I know it's
I
boring.
hate to say it, but
Take-
exactly. Didn't we? Yeah, boring.
Oh, yeah.
We had this on an arcade. I can't remember what the catchphrase was, but it takes a long time to build a real useful product. That's a difficult thing to do. Why is it going to be different when it comes to an incredibly complicated technology like blockchain that probably has its best use cases in areas of economic activity which have traditionally been subject to regulation and oversight? So sadly, it's just a slide into boomernomics and tradfi, I think, and we might have to alter our expectation. We got this really exciting ride because we got to lift ourselves up with all of this speculation that was frothing in the market, but now they've been given the perfect product. They've been given the meme coins, the tap to earns. They've been given, they are entirely satisfied with this junk food, and so there's nothing else for us to hold on to and except falling back on good old fashioned hard work. Maybe that's the way. Maybe that's what we look forward to is real utility coming out of this longer, more honest slog.
And do you think that all these vested tokens of VCs that have invested in early projects that are investing over the next, let's say, 5 years, it's going to be billions of dollars worth? Do you think that's going to hold back alt season that everybody's waiting for, or like the upside for all these tokens, or for the crypto space in general?
I
Anyone?
think, yes. I don't know.
You asking me what about projects that were sold in the last cycle?
No, yeah, so there's like the past 2-3 years, there has been a lot of fundraising happened for projects, a lot of VCs invested. All these tokens are coming to the market right now, but they will be unlocked over the next 1, 2, 3, 4 years. And it's like billions of dollars that come to the market. But currently there's not really an inflow of new people, or the new people that come into the market, they go directly into Solana to play with the meme coins. Do you think that's like an overhang or a weight on the shoulders that's challenging for a space? Or do you think like with this slow grind up that will just sort it out?
I don't think it's a supply issue. I think speculative activity is being captured by the meme frenzy, and this rotation of capital went into speculative opportunities, early stage speculative opportunities, but now those are all meme coins. And it's really hard for a project to sort of compete against a pure speculation play. That's an argument I heard put forward in an Outlier Ventures podcast, and it seems very reasonable, and it chimes with what a lot of observations that people are making.
I would actually, so sorry, just to jump in, I'd actually
No.
probably argue against that. I do think it's a massive supply issue. Now, I don't really know how the total crypto market cap, calculator works, like how they get to the number, which is currently at 2.6 trillion. But if they do factor in all the meme coins and, all the new launches, which again, I don't know if they do, but I don't really think there's that much more buy pressure. And the reason why is because I feel like, and I don't think it's just moving into meme coins. It's because first of all, you don't have the stimulus checks that everyone was getting, a few years ago, right? Which was absolutely pumping the market. You don't really have a lot of hype around crypto because Bitcoin is at all-time highs, like I've seen, before when your parents are messaging you like, "Hey, what's this Bitcoin thing again?" You don't have any, like, I'm not really seeing any retail traction whatsoever. And I do feel like although there are a lot of people in meme coins, they're going into meme coins, getting rug, and then leaving meme coins because why would you stay there after you got rug, right? So I think I don't actually know if there is enough buy pressure that's just moving into meme coins, but will eventually move back. And on top of that,
Mhm.
you have institutional capital. Institutions are all going into ETFs. They're not they're not touching altcoins. And then VC fundraising is at its lowest point that it's been for years, and it has been for the last like 4 months consecutively, like around like 400 billion or something like that, which is very low considering what it was in the past, or 400 million, like whatever the number is. And on top of that, I do feel like the supply side is, as Rick, as you said, projects that have gotten investment for the last however many years, they've all been delaying to launch until basically now. And some projects have tried to launch, and then their, ROIs on launch have been an average of like 1.5x to 2x, except Pixelverse lost. Everyone else has been absolutely dying. So they're all delaying until September. So you have not only just a massive influx of new projects and new tokens, plus the millions of meme tokens. On Pump Fund alone, it was like 1 million tokens launched in the first couple of months. But now you're having all the projects for the last 3 years that have been delaying. And it seems like they're all planning to launch in September. And honestly, I feel like what's the word, havoc that will happen in September when everyone tries to launch. there's still not going to be enough money. Everyone launches
No.
and it's still going to be a 0.5x ROI. I think we're going to have a mini bear market once again, lasting for a couple months. And then it's December. And December is always a bear market in and of itself. So it's honestly, I think it's such a massive supply problem just because of the delays and then all the new tokens. But yeah, I'm just also not really seeing much demand. But I'm happy if there's anyone, if there's data, happy to be proven wrong. I'm hoping to be
No,
proven
I
wrong.
agree. I agree with the things you were saying. I hadn't understood the supply issues being that pent up, all those projects that have been putting off going to market. And yeah, the huge thing is no matter how many cycles the oldest Bitcoiner has been through, interest rates have never been this high.
Yeah.
This is a first for all of them. And
Yeah.
and yeah, the way that institutional capital behaves is completely different. Yeah, fully on board with all the points you made there.
I'm on board.
Yeah, maybe the only counter actor is maybe the MiCA regulations which come in, which kind of force a bit to empty the bags this year, right? Being less regulated still. So that might be bringing some actions. I just see that kind of as a counter mechanic to what you say. Hopefully it's strong now.
But what do you mean
But
empty?
Alex is saying, what do you empty them into? Yeah. If everybody's going at the same time, there's just nothing, there's not enough there.
Yeah, I think
And
September.
we're not
is gonna
talking
be a
Bitcoin.
bottleneck. Yeah. But yeah, I think just September is going to be a bottleneck, which will then cause contagion for the next 2 months. And then after that, to be honest, there probably will be some sort of rebalancing. But what do you mean about the MiCA regulator?
Well, I just heard from a couple of friends who talk a lot to VCs that because of MiCA regulations, it's quite a hefty change for like how to manage the balance sheets in the fund, that you need to be way more strict on how to basically deploy your capital, not to get over debt. And this year, MiCA is not yet on the market, right? It's not enforced yet.
Oh, so you mean they want to get rid of all their money before that happens?
Exactly. As long as they deploy this year, they're not yet in the strict regulations of compliance and the new regulatory standard for the balance sheet. So that might be an advantage to get a bit more liquidity out. But if there is no money to deploy, there is none, right?
That's only Europe, right?
Yeah, we're talking about the
it's
infamous
retail
European
market,
VCs.
like, and not only the European VCs need to comply, because MiCA is basically stating that if a project onboards a user from Europe, they need to comply, and every stakeholder part needs to comply. So it's enforcing it on a global scale, even though it's a EU regulation.
I don't know how
I'm
much
not an
impact that'll
expert.
have on. I mean, I think it might have some impact on some VCs that are trying to offload on their books, but it does make more sense that people are going to play it a little bit more careful. Like Alex had mentioned, the VC capital in the space is slowing down a little bit. And I think people are also trying to understand what's going to happen with the election in the US over the next several months. But yeah, like these are all arguments for this space just slowly and gradually and healthily growing. And that growth, I think, is going to be pushed by projects that are building products that are catered towards people that are not in Web3. They are using things that are in the agricultural industry or the telecommunications industry or the biotech industry. And in order to use these things, maybe you need to gain some crypto exposure and you need to transfer some capital into this environment. And so I think that's what's really going to push the growth here. So yeah, I think Rodrigo made a great point. Like all these people they have the snacks. They've been eating them. They've been munching on them. And I don't think the appetite is growing. I think it's dwindling for all this speculative crap. So yeah, it does make sense that we'll just see the market steady out a little bit, but I might be wrong. I've been wrong virtually every past cycle. We'll see what happens.
There was a beautiful meme that came out and that I saw a couple of weeks ago. It's a Game of Thrones meme, and it's Jon Snow in this sort of like pose with a sword and a giant furry coat, except that on the head it's J-Pow, and the caption says, "Printer is coming."
Oh no.
We can hope.
Yeah, that's a very good closing remark. I actually love
Printer is coming.
analogy.
Oh, man.
The 2021 meme game
To be
was so
satisfied.
solid.
Our meme coiners, these the junkie. It's phenomenal. a very good and insightful discussion, guys. I'm very glad that you have made time to come. Unless you think we should cover another topic, I believe we can leave it for good, and hopefully we inspired a couple of our viewers to take action in the next months and weeks and stay close to the market. I would be very glad to do this round again in a couple of weeks or months to see where we are and how we evolve. But to me, at least, it was very informative and super exciting talking to you.
I have nothing else to add. I would just give everyone a chance to share where people can learn more about them. Sasha mentioned he's gonna share some documents or blogs about node sales. I think Rodrigo also has a very informative channel about token design, and Alex also put out content related to this. So if anybody wants to learn more about what you guys are doing, show me your channels. Sasha, where can people learn more?
Yeah, sure. You can find us on our website, Arcanum.Ventures, our Telegram group, Arcanum Ventures, our YouTube channel, Arcanum Ventures, virtually everything, Arcanum Ventures. We even somehow managed to amass 15,000 TikTok followers. I have no idea how that happened, but we're on TikTok too. If you're interested in some shorts. So yeah,
What's your TikTok handle?
I think it's Arcanum Ventures.
Let's do this.
Okay, thank you very much. Rodrigo, how about you?
I've got a YouTube channel called Token Design. I'm not pumping out as much content as I used to. I'm focused on a risk project, but I'll be releasing that on that channel once it's complete. And beyond that, I'm on Boomer Time on LinkedIn, and that's where I make some noise. Yeah. Oh, I've got a website as well if you want to reach out to me, rmckinley.net. But yeah, just reach out to me on either of those other channels if you're interested.
Perfect. And Alex?
Our website, simplicitygroup.xyz, and also we have a nice Telegram channel, which is just /simplicitygroup or @simplicitygroup. And I don't want to say the YouTube channel by Rodrigo and the content Arcanum make are very, very good. It's quite rare to find a token economist that isn't just chatting shit, to be entirely honest. We know so many, and I'm going to let Sasha maybe in another podcast name and shame because get spewed. But yeah, it's quite rare to find someone who knows the whole picture. And yeah, I think when you're designing tokenomics, it's very important to know the whole picture, the economics and the crypto side, but also the legal side, the incentive side, the human side, the psychology side, you know, how launchpads work, how liquid, the whole thing. And you don't know how many people do. So I think they're very good resources.
That's why we invited you guys. That's exactly why. Thank you very much for coming, for providing all the info, sharing your thoughts. I really enjoyed the conversation, and I learned a lot, to be honest. Some more insights I didn't have yet about tokenomics. I hope the audience also does learn and keeps learning. And again, nothing in this video is financial advice. It's all for educational purposes. I hope you can learn something from this. I hope you do your due diligence before buying into certain tiers of node sales or investing in node sales. Don't put in more than you're willing to lose. And yeah, thanks guys. Thanks. This was a great episode.
Take care, y'all.